I can't remember a better outlook for grains as we move out of winter, at least for eastern Australia. There's a worry in the west, but there's a hope of spring rain, so all is far from lost out there. The good thing is that for a change we have strong production coinciding with decent prices. Here's the ASX graph for East Coast wheat delivered January next year. As you can see, prices were so-so until about July when they zoomed north on the back of weather problems in Russia, the Ukraine and Canada and a few other countries as well. And here's the graph from the Chicago Board of Trade where most of the world's wheat is traded. It's remarkably similar to the ASX graph, ordinary prices, then that remarkable spike and a bit of a fall-off in recent weeks, but still very strong in historical terms. Now let's check some wheat prices, and starting with the ASX. Prices on both sides of the continent lifted fractionally over the past week. And while there's been a lot of talk about problems in the West, the Commonwealth Bank has bitten the bullet with its agri-commodity strategist Luke Matthews suggesting a downgrade on expected WA wheat production.
We're currently forecasting a national wheat crop of slightly more than 22 million tonnes. So a slight upward movement from the 09-10 crop. Within that crop, we're looking at a fantastic East Coast crop, but we've got some serious concerns about the WA side of the balance sheet. Seasonal conditions over there have been unfavourable and is likely to result in crop estimates in the west being pared back over the next few months.
What's the downgrade likely to be?
So we had originally penciled in at the start of this year a WA wheat crop of around 7.5 million tonnes, but it's looking increasingly likely that those numbers will be downwardly revised down to around 5 to 6 million tonnes. It's quite a wide range at the moment. The situation is quite fluid and changing all the time, but an estimate of around 5 to 6 million tonnes would be where we're thinking the WA crop will come in.
So there it is. Consistent rain is absolutely crucial to any hope for the WA crop. Checking Chicago now, and wheat prices bounced before being trimmed in late trade. Soybeans remained firm, as was corn, which has seen some big export sales in recent weeks. That wheat price slumped late in the week, but was also helped by confirmation that Russia will actually be importing wheat. Incidentally, the contracts further out for wheat are much stronger, and back home the local market fell away a fraction. But that wheat price is still $80 above what it was in late June. Canola is steady and sorghum demand remains reasonably firm. Now to livestock, where cattle numbers across the eastern states were again restricted by wet conditions preventing the mustering and transport of stock, so national throughput was down 22%. Prices, the NLRS indicators reveals a strong cow demand, a bit of a surprise for this time of year. Other categories were firm to flat, and there was a slight slip in the eastern young cattle indicator. Lambs now, and last week I used the word unbelievable. Well, what can I say now? Yet another record price, $203 a head at Wagga Wagga last Tuesday, and even a pen of Dorpers reached $177 a head at Forbes on the same day. The indicator price stayed steady on the back of a flush of new seasoned lambs of top quality, while that mutton price is based on a shortage of numbers and producers holding on in what is a terrific season. Checking cotton, and here's yet another weather story. The Pakistan floods have pushed the floods in China somewhat into the background, but cotton traders have not missed the potential damage to China's cotton crop, and prices have reacted accordingly. Here's the cotton movement since the start of the year. A steady trip north, some hiccups here and there, but the fact is cotton has been on an upward trend in price since early March. Last week cotton lifted again to get close to the 90-cent mark. But sugar is a different story. Lots of bearish news here, although one positive is a 200,000-tonne tender from Iraq. And I doubt local growers would complain too much about that price, above 19 cents a pound. And finally to wool, where it was a flat week with buyers from China dominant, followed by Europe, India and Taiwan. And the AWEX Eastern Market Indicator closed at 874 cents a kilo. And that's the Landline check on prices.